This is Cary Artac with Artac Advisory. I'm recording this video on Friday, April 30th, 2021. I've had a request for Canadian dollar analysis. Canadian dollar is considered oftentimes a commodity currency. It's got a really tight correlation historically with crude oil pricing. They're a big exporter of crude oil. The U.S. is a big buyer of crude oil. The Canadian dollar futures is really just a measurement against the Canadian dollar versus the US dollar. Let's jump into, these are all weekly charts, by the way, I'll be showing you, and I'll be giving you a set of numbers. We did have a buy signal clearly back in August above this descending channel top at the time, well below the market now. May 72 handle, June 71 handle, well below the market. I don't anticipate seeing that anytime soon. And in fact, it's likely we are to test this horizontal structure in the weeks ahead. We've had a big rally here this week already in the Canadian dollar. And so it's 0.83007 the week of May 3rd, which is next week. And a full 4 weeks later, rises ever so slightly to 83009. This 83 handle resistance is able to contain annual buying pressures. I don't know if it will or not, but it is a significant pivot point into later year. In this vicinity, the Canadian dollar futures can grow tired, overbought, and fall back. I'll give you support in a moment that's nearer term in nature, but just know that if we do close above this 83 handle resistance at the end of any week, then we've got a longer term sign of bullish continuation. We should then, this rally was basically a 1 year rally here. Excuse that interruption. This was a 1 year rally. I would say another year. 6 months, probably not. I don't think we can do this in 6 months, but you never know. I'd say over the next 8 to 12 months, the 94 handle resistance would become a realizable target. So if we close above 83.07, for instance, at the end of the week of Monday, May 3rd, then bullish continuation into spring, summer of next year, by which point we should then reach this longer term resistance that goes back, 14, 15 years or so, that can absorb buying on, I'm going to say, a decade-long basis. But it doesn't become a target until or unless we close above 83 handle resistance. Until then, you should consider this 83 handle to be our ceiling through the rest of the year. And from here, yeah, we could fall all the way back into the lower 70s over the next, the timing of that is difficult. Let me show you actually where that may occur. Now I've got a nearer term chart. This is the same exact chart that you were looking at, but just zoomed in a bit. And right now you have channel support this week, next week, May 3rd at 78445, rises to 79005 a full 4 weeks later. So you can subtract these numbers out, divide by 4, and you'll know exactly where this channel bottom is each and every week in between. And this channel bottom is predicated on this trend line across these highs. And the reason I'm telling you that is because if this market continues onward and upward, which it may well over the next few weeks, and violates this trend line, which next week, the week of May 3rd, is at 81.86. So if that happens, these numbers change. This, channel analysis is a dynamic approach, and it's predicated on preceding trend lines. And so if we violate that trend line, this channel structure needs to be recalibrated. I'm telling you that because if we push onward and upward to 83.07 and it holds and we fall back in later May to 79.005, that channel doesn't actually exist anymore. It would be predicated on this, whatever this new high would be. So I probably don't have to tell you that. I just want to throw that out there, that these numbers are good for now, so long as we continue holding below this trend line. And it is support, 78.445 to 79.005, that can absorb selling, at least on a monthly basis. And once tested, the market can consolidate and actually push higher onto that 83 handle resistance within several months, perhaps. Closing below 78.445, excuse me once again, at the end of next week, and that's a long shot, but I'm just giving you that as an example, would indicate several weeks bearish continuation, 3 to 5 weeks at the most, to 76460, rises to 77020 the week of May 31st. They are 4 weeks apart. You can subtract them out, divide by 4. And as long as we don't violate this rising trend line, this channel bottom remains valid all the way into summer trade. And this is our base of support, in my opinion, that can absorb selling really into later year. We could fall back to this. It can hold. We can consolidate, rotate higher, and back to 83 by the end of the year. So that's kind of what I'm seeing here as we continue into summer trade. You have a strong, solid base of support in the 76, 77 handle that, if tested, can absorb selling into later year. And, I think that this 83 handle resistance is likely to be tested. I think the market wants to, if you will, test it, and it can absorb buying on an annual basis. And from there, we can fall back to those levels I gave you a moment ago, possibly as we continue over the next 8 to 12 months back into the very low 70s where this channel formation exists. We have a double bottom here in the 68 handle that goes back to the 2016 and 2020 lows. So I don't know if we'll see that or not. I would actually need to revise this analysis if this Canadian dollar sells off appreciably in the weeks and months ahead. And don't be afraid to nudge me for an update on this analysis if so. Let's take one final look at the market that's somewhat correlated, and that is a long-term crude oil West Texas Intermediate futures. This presently reflects the June contract. It is a volume rollover, so once we roll to July analysis or July contract, that July will inherit these levels. So this is sort of a broad picture of the crude oil market weekly chart. We've been testing this channel top for the last couple of months. We've pushed through it. We've never settled above it by more than 1%. And as of this week, the week of Monday, April 26th, we are pushing through it again, but we've backed off as of Friday, April 29th. It doesn't look like we'll be closing above it this week. Next week, the week of Monday, May 3rd, this channel formation drops to 64.84. And it can absorb buying really through summer trade. And from here, this market can fall back into the 45, into the mid 40s over the next 3 to 5 months. This is a longer term channel top, as I say, that can contain buying through summer, and below which we don't have the signal yet to the downside, but just know that having tested long-term resistance, this market can fall back into the mid 40s over the next 3 to 5 months. Inversely, if we close any week above this formation, and once again it's 64.84 the week of Monday, May 3rd, then we have a 2 to 3 month buy signal up to 76.44. And why am I telling you that? I'm telling you that because I do believe that if we close in crude above 64.84 next week, that Canadian dollar may well muster its own settlement above this long-term resistance at 83007, which should set it on a continued bullish path through the rest of the year and into early next. Until then, we can grow overbought into later year, holding below this 83 handle resistance. And I think that's really all that needs to be said for this particular video analysis on the Canadian dollar futures.
So do yourself a favor. Fill out the free trial form on this website. Take that 2-week test drive. You have nothing to lose and much to gain.